Hello, good morning. My name is Gulfraz Kayum. I'm a managing director at Citi, focusing on RTMT and digital infrastructure practice. It gives me great pleasure to host this panel, Telecoms Infrastructure Investment and Resilience post-COVID-19. I've got an esteemed panel here with me. To start off, I will ask the panelists to introduce themselves briefly. Hervé?
Hello, I'm Hervé Sucre. I'm CTIO of Orange Africa and Middle East.
Ian?
Hi, Ian Patterson. I'm the Chief Investment Officer at Africell.
Marek?
Hi, I'm Marek Basfi, CRO at American Tower Africa.
Tom?
I'm Tom Greenwood, Chief Operating Officer at Helios Towers.
Okay, great. So we've got both sides of the equation well represented here, both the MNOs and the towercos. Briefly, the format of the panel today will be questions and answers, a discussion with the panelists for about 20-25 minutes, and then we'll open the floor for any questions that the audience may have. So to start off, I have a question for the panelists, which is, what has been the impact of COVID-19, particularly over the last 6 months? What's the outlook for 2021? Has the impact been on a net basis positive or negative? And I'll perhaps start off with the operator perspective, who are the closest to the end consumers. Hervé, if I can come to you with that question first, please.
Yes, on the financial side, the COVID has led to an erosion of our outbound voice, deceleration of Orange Money profitability, and deceleration on wholesale activity. We were able to keep our results okay and continue to grow, but limited growth in the first half of 2020. And we had to take some strong action plan to protect our profitability. Overall, we are moving to a more digital. The COVID crisis has been a strong impact in accelerating the move to digital, more digital internally, more digital interaction with our customer, and more data usage by our customer. So we had to redirect our investment to support this, accelerating our capability to support the surge in data traffic. At the same time, we are also continuing our action in terms of long-term investment to support data for Africa, including long-haul fiber connectivity. And we have, for example, we have 2 key projects like Joliba, which is a multi-country West African backbone that Orange is currently deploying. And we also entered into the 2 Africa consortium with Facebook. Another example of how important it is to continue to invest for the data connectivity for Africa. You are on mute.
Ian, I don't know if you heard the question.
Unfortunately not. Could you repeat it?
Sure. Same question to you. I was saying, have your experiences been similar? Any additional perspectives from your side?
Yeah, in many ways it has been similar. I think we've seen trends that have been emerging for several years really accelerate. Beyond anything else, obviously, you asked, is the COVID impact been positive or negative? I mean, I don't think anybody could claim this is a positive situation. From a big picture perspective, we operate in an industry which is critical to the response to COVID, and so the dynamics within the telecommunications industry, whether that's on the operator side and the service provider side or on the infrastructure side, have maybe been slightly less detrimental, but there has still been responses that were required, similar responses, I think, to some that Hervé mentioned around managing to control the cost base in light of a changing dynamic from a revenue perspective. The revenue growth is still there, but it's not as perhaps robust as we might have hoped for. We've worked closely with our partners on distribution, on the infrastructure side of things, with the regulators and the host governments, with the countries that we operate in, to try and provide the best possible service, in particular in the early days in March and April, when there was a real surge in demand for data in particular. We worked to try and boost capacity. We worked in some countries, we were able to secure additional spectrum to support that, as well as accelerating our investment plans. So it has been a difficult time. We have shown good resilience, but we are, I think, still very much looking, with a degree of cautious optimism around the resilience of the business going forward. But obviously there is heightened uncertainty just overall, not just in our industry, but across the economy more broadly.
Okay, if I can come to you, Marek, first, and then I'll come to Tom on the same question. So you've heard the perspective from your customers, and of course you deal with them on a day-to-day basis. I guess a two-part question for you. So the impact of COVID, both as you're dealing with your customers with the challenges that they are facing, what sort of impact are you seeing from a knock-on effect of that? And then also, what are the direct impacts for the way that you run your operations?
Yeah, thanks. Listen, I think the past 6 months have been tough. It's really been a case of keep the lights on. And, I think when we talk about impact, the biggest impact must have been to all of our people, and I think about how we used to operate pre-COVID with people in an office, how we operated for the last 7 odd months, and most of us still working from home. And, going forward, when we think about how this has changed things permanently, we don't see a situation where we get 100% people back in the office in the future. We're replanning how we work, hybrid sort of way of working. We virtualized our NOCs to support redundancy for our customers. And we've sort of changed the way we manage our supply chain, because there's been some real challenges with the supply chain. I think, looking forward, the real things that worry me is the currencies. That's going to have a big impact on the cost of, a lot of the OEM imported goods for our customers, and that will impact the amount of rollout they can do and upgrades. I think the other thing that sort of concerns me a bit is government finances. Most of the government's finances have been stretched significantly in terms of supporting the response to COVID, and how will that come through and impact our industry, where the telecoms industry is a big industry in many of the African markets. So I think that's sort of the things that are probably worth mentioning that weren't already covered.
And Tom, coming to you, what sort of impact have you seen? And in particular, Marek spoke about some of the challenges of operating an infrastructure business in this climate. If you can also run us through, were you able to uphold your KPIs, your SLAs?
Yeah, no, absolutely. Thanks. So yeah, I mean, look, just to build on that, we've had I think an overall actually pretty good experience from this whole exercise. I mean, for our office staff who are across the group in all markets have been working from home since about March time. If anything, we've seen increased productivity from people. And our field staff, engineers and security guards who go to sites and fix sites and keep the power running. We've actually had our best ever power uptime performance in the past few months in our 10-year plus history. And all those field workers are classed as essential workers in all of our markets. So, there's no real change there to their activity pre or post. They work in a kind of isolated way anyway. It's, it's 1 or 2 people driving around in trucks. So, and, the governments obviously want all of the field staff to continue working. So, they get passes to drive around and things like that. So, I think whilst we have changed the way we work, particularly from an office staff perspective, I think it's been a change, but it's actually been a reasonably okay experience, I'd say. And the power uptime certainly shows that. And I'd say our customers, different mobile operators have done different things. Some have rolled out a bit more, some have kind of kept on the same track, some have held back for a few months. So we've seen a bit of slowdown in rollout for a few months, but we don't see any sort of underlying change there in terms of our pipeline, other than perhaps a little bit pushed back. But I think we're keen to support all our mobile operator customers, and that could include helping to release money from balance sheet through tower acquisition exercises, which some mobile operators are looking at, and we're keen to support through that, particularly in light of what's going on, to the extent there's more investment needed in the network or new technologies to be rolled out. The tower sale can very much help with that. So we're both operationally and from a capital monetization perspective, we're trying to put our best foot forward.
Okay, great. Hervé, I want to come to you now. I think the challenges are well understood. I think the opportunities are there. Telecommunications plays a critical role and ever increasing role in this COVID crisis has shown that. Now, in Europe, and Orange has operations in Europe as well as Africa, what we've seen is fixed line traffic increase, mobile traffic not so much, and in some markets actually mobile traffic has gone down as people have become more stationary, working from home. In Africa, there isn't the same fixed network, so communications is dependent on mobile networks. Have the mobile networks been able to cope with increased traffic, if indeed you have seen increased traffic? And how has the crisis impacted your investment plans?
Okay. In fact, we have seen a huge surge in terms of traffic, both fixed and mobile, up to 60% increase of traffic. So it's quite drastic. And we had to work very, very hard in order to cope with this increase of traffic. We work in terms of mobile capacity, enhancing the mobile network capacity, but also in terms of core and backhaul, including international connectivity. So a lot of action were done in the beginning of the crisis to sustain this traffic growth. We have to also take into account that fixed activity is coming in Africa. We have more and more fixed offer in Africa. Fixed offer delivers through fiber with FTTH, but also deliver through mobile with TDD, for example, and FTD. So all in all, a lot of investment to support the traffic, but the network did sustain it correctly. And at the end, we are quite proud to say that we made it.
Okay, well done. That's very substantial increases. Where you can have handoff, that helps, but clearly FTTH is still nascent in Africa. Ian, if I can pick up that question with you, ultimately, you as the operators need additional spectrum, you need additional towers, and you need backhaul. In order to meet sustained increases in traffic going forward, and that was the case even prior to COVID, but COVID has accelerated the need for data capacity. From an operator perspective, how can the infrastructure players like American Towers, like Helios, support your business? In other words, what do you require from the infrastructure operators, and what can you do? What can you do yourselves?
Well, we operate quite a hybrid across our different countries. We have sort of bespoke models to serve the needs and our requirements and our customers most effectively. So in two of our markets, we're very much sort of vertically integrated, rely on our own sort of capabilities to deliver quite a complete infrastructure end-to-end solution. And I think that will continue to be the case for the foreseeable future. In the markets where we partner more with the likes of American Tower and Helios and sort of more independent players. Look, I've said this, I think, on last year's equivalent panel as well. There's a big gap in profitability levels between the tower companies and between some of the mobile operators. And so I think a long-term partnership needs to see a fair split of the economic opportunity. We obviously have significant ambitions to roll out more broadly. We'll do that in partnership with independent and open access infrastructure providers, but the prices obviously have to make sense for both sides. And I think the pendulum did swing for a long time very much in favor of the infrastructure players. That will we hope come back to I think a more central position. We take a lot of technology risk, we take a lot of obviously go-to-market risk, and we have a much broader distribution channel to get to millions of end customers, which is logistically very complicated to manage. And the tower companies obviously have a slightly smaller addressable customer base, but they do significantly larger volumes with those customers. So there's a very different sort of operating model between more of the MNO side of things versus the towerco and the infrastructure providers more generally. I think everybody has to realize that this is a market that for it to be sustainable and for there to be growth across the board, there's got to be a fair balance struck, and that's what we're seeking to do.
Okay, well, look, let's put that question to the tower operators. Now, of course, Ian, your references are primarily to sale and leaseback transactions, and that balance can be struck contractually. But there's also a BTS side to this equation, where again it's a contractual arrangement. Now, in consideration of that, and I'll come to you first on this, Tom. In consideration of that, and in consideration of increased need for towers across the continent, how do the tower operators play their role in supporting the MNOs?
I guess it's the kind of age-old back and forth between telcos and mobile operators, and first of all, the sale and lease back, and where do you set the level for that, and that will almost always be driven by what the mobile operator wants. They're looking to release a huge amount of cash on their balance sheet, and therefore they're willing to sign up to a higher lease rate, or do they want to focus more on lower OPEX, and therefore it's a lower consideration, lower OPEX deal, and and once you've done one of those deals, it's it's there for forever, for effectively, and then you've got the build to suit and the co-location, which you mentioned, Gulfraz. Ultimately it's about everyone making money and everyone being successful, and we want our customers to be successful. We want them to be money making and profit making. The minute they roll out of sight, we want them to be successful in that new location. And I think one of the ways that can help with towercos willing to deploy capital and say roll out a lot of build to suits and give operators a reasonable price is, of course, if there's 2 or 3 operators on the site from day one. So that can always help. There's at the moment there's a lot of rural rollout push across markets, driven sometimes by governments, driven sometimes by mobile operators themselves, and sometimes both. And so in those circumstances, they can sometimes be the more challenging ones to make economic sense, because it's a rural location, it's maybe at the fringe of the network, maybe the ARPUs for the customers in those locations are generally low. And so it's a little bit more difficult, but there are ways of structuring a build to suit in that sort of location, where the economics are a bit tighter, which again has particularly helped if there are two operators on the site, for example. So, perhaps more collaboration between operators and towercos in terms of, figuring out where are the best places to roll out new rural networks. That could maybe help, get everyone into the right locations, and therefore mean that everyone can, make a bit of money.
Marek, let me come to you next. So we've heard that with the crisis, there's a little bit of softness in the consumer market. So whilst demand is there, people's pockets are being impacted. You would think that makes the role of the tower companies even more important, and that collaboration that Tom discussed is even more relevant, because you can then deploy solutions that would enable the sharing of capex and the like. My question to you is, what is your pitch to the operators? Has that pitch changed given COVID? And if you can perhaps also touch upon some of the areas that the tower companies can, unlock economics. Tom spoke about rural areas. Perhaps you can speak about fiber. American Towers has a lot of history there in its operations. So broadly speaking, what is your pitch to the operators, and how has that changed or is changing because of COVID?
No, sure. Let me also just address some of the great points that Hervé and Ian made. I think that as Hervé has mentioned, his strategy is starting to look at fixed as a sort of a combination with mobile. So following a lot of what we've seen in Europe, sort of this fixed mobile play, and we want to be there to support our customers in terms of that. That requires capital. It requires a specific model that works for Africa, and we think we've been successful with that in South Africa, and we want to see how we can support our customers in the rest of Africa as they look sort of to deploy on that strategy. Ian mentioned obviously there's continued cost pressure, and it's no surprise that the two most important things to our customers are cost and time to market. So on cost, I mean, Ian should be familiar with the sort of the great strides that have been made with him and his team in Uganda. And I think, we really trying to move away from just this sort of, the contract signed, see you in 11 years, to something where, we're partners, we're flexible, and we look for win-win solutions. And that's, there's no one answer to that, but it means getting close to your customer, understanding their strategy, and then figuring out from there how you can, both satisfy their needs and your shareholders' needs. I mentioned in the keynote, it's important for all of us that we're successful in Africa, all stakeholders, because that attracts more capital and that allows us to, grow the pie. So I think, that's really addressing some of the specific points made. I guess more broadly, not a pitch, but, where else are we looking to work with our customers? The rural and ultra-rural space is key. There's faster, more nimble players who are already looking to service that area. We are doing some sort of proof of concepts with some of our customers, and we're keen to partner with some of the innovative players. The real things that are struggling, are barriers to ultra-rural, I guess, are cost of capital, where I think we're in a strong position. So obviously power costs, where I think we're in a strong position. And then, some of the areas where we need to partner on, which is more on the backhaul and obviously, light structures. So that's an area we want to help on. And then positioning for densification, we think is key in the urban areas. So, we doing in terms of, build to fill, which is a key part of our new build strategy, is we proactively go out and permit sites in areas we think will be interesting for our customers, often in close collaboration with them around key nominals. And then when they're ready to pull the capital, the investment trigger, the lead time to get to market is significantly reduced, in some areas from a year to, just a few months. And I think that's paying for us. We, with our customers through a difficult COVID period, we still plan to roll out over 1,000 sites this year. And I think that's sort of testament to the close working relationship we've established with many of our MNO customers. So that, I guess that would be the main areas that I would talk to.
Yeah, Marek, just quickly on the fiber side, is this fiber to the tower, or even possibly beyond, but certainly fiber to the tower, is this something that American Towers is looking at and will look at more going forward?
Look, American Tower globally, it's well known. We've invested in several fiber initiatives. I think it's part of our innovation strategy, and there's no one model that's worked. So I wouldn't specifically focus on fiber to the tower. Actually, in South Africa, it's largely been a fiber to the home with a partner, and then leveraging that capillarity to give our MNO customers fiber to the tower at a marginal incremental cost, you know, so really helping them to lower their total cost. But there's the innovation strategy in American Tower Global is something that we're sort of working through, and I wouldn't say there's a defined endpoint in terms of what fiber should look like. But we found that the models that work is where we partner closely with our strategic customers to look at fiber to the home and leveraging that capillarity to then drive fiber to the tower and other bolt-on sort of products to in the end give a total cost for our customers that is lower, and allow them to address the sort of fixed mobile convergence wallet, you know, of our customers. You know, the one thing we've realized working from home, operating in 7 countries, is that there's a long way to go in terms of investment to allow for the broadband we need to allow for sort of simple work from home use cases, never mind the more complex 5G use cases that we hear spoken about. Yeah,
and it's I think very clear that, you know, demand is ever increasing. Infrastructure supply is going to have to increase, and I think you've all said it, that the way forward is a collaboration, clearly a symbiotic relationship between the MNOs and the tower companies. We've got just under 10 minutes left. We can open up to Q&A. There's a first question here that's popped up on my screen, so let me ask the panelists the first question. Is there an opportunity for active sharing for rural areas in the African market? And if so, is there a regulatory framework that can help in this regard? Hervé, let me turn to you with that question first.
Yes, in fact, we are a very strong supporter of active sharing in Orange. We found that in Europe, we are using large-scale active sharing very successfully, and that in Africa we still need some education towards the overall environment about the real benefits of active sharing, and that you can be competitors and do active sharing at the same time. So a lot of action on our side. We are pushing very hard for active sharing. One of the constraints is clearly that we need a stable regulatory environment, so we can build on the long term, because when you engage yourself into an active sharing, it's a long-term partnership. And also we can reach the capital market and get the investment and the partner to support us in this strategy.
Yeah. Marek, is there a role for the tower companies on the active sharing side in rural areas?
Well, look, I think as Hervé said, there's a need to look at how we can address a market that requires a much lower cost structure. And active sharing, you know, reduces the need for multiple, you know, MNOs deploying capital on active equipment. So there's a need. I think as tower companies, you know, we are not experienced at managing the active equipment. It is something that we're experimenting in, and if we can add value in that value chain, we will absolutely play a role. I think it's early days for us. There's the more sort of nimble players out there that you've mentioned earlier on, or Matt mentioned earlier on in his session, that are actively addressing network as a service. And, you know, we keen to play a role, but like I said, probably early days as we find our way in supporting that. You know, one of the things we are doing is obviously looking at where we have customers who need to do some sort of RAN sharing, maybe more on the edge of the current networks rather than in ultra rural. We're looking at constructs commercial constructs that support that ambition. And you'll know that in some of our markets, some of our MNOs are already engaging in that active sharing. So I think that there is a commercial construct role to play where we, finding a win-win. And then there's the more longer term play, which is, the ultra rural, and, what does that look like, to be successful? I have some specific views in terms of the ultra rural, in terms of whether active sharing is actually going to be required, because of course it all comes down to the wallet share in the ultra rural, and whether the wallet share supports multiple MNOs, but that's probably a separate discussion.
Okay, well, the next question here is regarding energy efficient solutions, and in particular solutions which are environmentally friendly. The question is, how do MNOs and towercos ensure that their networks are green? And in particular, what are the priorities in terms of quote unquote greening the network? So I guess this is more of a energy related question. Tom, I know this is a big focus area for Helios Towers. Can you? I'll turn to you for this question first.
Yeah, great. Yeah, no. So look, I mean, greening our network is a big part of our strategy, and has been for a few years now. And we've deployed things like solar solutions, hybrid solutions. We have an ongoing grid connection program, and things like that, which all are ultimately aimed at reducing the fuel consumption and therefore reducing the CO2 emissions. So that's an ongoing strategy of ours, and will be ongoing for the coming years as well. And I think each year that we go through, the quality of the technology gets a bit better. The prices of solar and things like that come down a little bit, and there's more and more sites where it makes sense to put it. I mean, I think one of the challenging factors is the power consumption, which mobile operators are putting more and more equipment on, particularly with data networks coming through. All of that equipment uses more and more power. Whereas solar can struggle with a lot of that power, and you have to put more and more equipment on the site. So there's always a balance to find between the sort of the cost and the efficiency of the solar and hybrid technology versus the sort of optimum amount of power that a mobile operator would want to put full technology on the site. So but that's just an ongoing conversation, and I think we'll continue. But yeah, it's a big part of our strategy to continue this for the coming years.
And Tom, we've been hearing about solar solutions, environmentally friendly solutions for quite some time. The sort of initiatives that you're talking about, have they made a dent? What proportion of hybrid solutions or solar solutions do you have within your portfolio?
Yeah, absolutely. Yeah, we have around approaching 500 sites with full solar solutions, and that's out of 7,000 today. And we have roughly double that with hybrid. And so it makes a bit of a dent, and hopefully that will continue. The other thing though is that the grid connection, we're finding that grid is getting a bit more further spread in some of our markets, which has enabled us to connect several hundred sites to grid actually in the past 18 months. And of course, if we can do that, that's in many ways the best form of green energy, because you don't have to mess around with batteries on sites and things like that. So that's reasonably encouraging, and hopefully we'll see more of that as well over the coming years.
Yeah.
Okay. Maybe if I could add.
Go ahead, Marek, quickly.
Yeah, just quickly, I think, interesting, 2 of our markets out of the 7 already have over 10% of their source hours coming from solar. And, working close with Hervé and his team, in Burkina Faso, we've seen, Orange has got a very set strategy on green energy, which I really love, because it gives us an opportunity to work with them to find, ambitious, routes or targets for the markets in terms of the long-term planning that both, our business has in there. So the green energy is a very exciting space, and I think we're going to see a lot of investment in that in Africa.
Super. Well, that's a good note to end on. Unfortunately, we've run out of time. That was a very insightful discussion, so I'd like to say thanks to the panelists and for you for participating. Thank you very much.
Thanks, Gulfraz. Thanks, everyone.
Thank you.
Thanks, everyone. Cheers. Bye.